This is a snapshot of external sector performance and monetary policy stance as per press releases in July by Central Bank of Sri Lanka. Outlook for the global economy has deteriorated recently amidst the global spread of inflation, substantial interest rate hikes, and escalation of geopolitical tensions. Unfolding of these events could have large negative spillover effects on emerging markets and developing economies in the period ahead. Having noted the higher than expected escalation of headline inflation recently and the increased persistence of high inflation in the period ahead, Monetary Board was of the view that a further monetary policy tightening would be necessary to contain any buildup of adverse inflation expectations. In arriving at this decision, Monetary Board weighted the impact of tight monetary conditions on overall economic activity, including MSMEs and the financial sector performance, among others, against far-reaching adverse consequences of any escalation of price pressures across all sectors of the economy in the near term. This is the summary of announcements. Domestic economic activity is expected to record a notable downturn in the near term. External sector continues to face heightened challenges. Market interest rates continue to adjust upwards in response to tight monetary and liquidity conditions. Although inflation is projected to remain elevated during the remainder of the year, a sharp disinflation path is expected thereafter with appropriate policy measures. Policy rates are increased further to rein in inflationary pressures. Import expenditure has declined, while earnings from exports increased in May 2022 on year-on-year basis, extending the contraction in the trade deficit for the third consecutive month. Meanwhile, tourist arrivals slowed down in May. Workers' remittances have been increased during the month. This illustrates summary of external sector performance. Merchandise exports have increased during the first 5 months of this year. Further, merchandise imports also increased during the first 5 months. Trade balance has been recorded as 3.53 billion USD. Workers' remittances has decreased almost by half. Earnings from tourism has recorded as 681 million USD. Trade deficit narrowed to 404 million USD in May. Terms of trade, meaning the ratio of the price of exports to the price of imports, deteriorated notably by 18.5% compared to the previous year. This indicates major contributory factors for the year-on-year decline in trade deficit during January to May. Correspondingly, textiles and garments, petroleum products have largely contributed towards increase in exports. On the other hand, telecommunication devices, sugar and confectionery, and base metals have contributed to the higher decline in respect to imports. Earnings from merchandise exports increased substantially by 17.5% for the corresponding month in 2021, recording over 1 billion USD. Expenditure on merchandise imports declined to the lowest level since November 2020, recording a decline of 9.7%. On the other hand, workers' remittances increased to USD 304 million during May. Tourist arrivals slowed down notably in May to as over 30,000 tourists compared to 62,000 arrivals recorded in the previous month. Ongoing fuel shortages, power outages, and economic and social disruptions could have weighed on tourist arrivals. India, UK, Russia, and Germany remain the main countries for tourist arrivals during the month. Foreign investments in government securities market recorded a marginal net inflow, resulting in a cumulative net inflow of 4 million USD. Meanwhile, foreign inflows to the Colombo Stock Exchange, including primary and secondary market transactions, recorded a marginal net inflow in May. Gross official reserves stood at 1.9 billion USD as at end May. This included the soft facility from the People's Bank of China, equivalent to approximately 1.5 billion USD, which is subject to conditionalities on usability. Total foreign assets, which consist of gross official reserves and gross foreign assets of the banking system, amounted to 5.6 billion USD as at end May 2022. This signifies gross official reserves and reserve adequacy. Reserves are barely sufficient for 1 month of imports. Moreover, there's a decline since January 2022 up to date. A middle rate has been announced beginning 30th May 2022 based on the weighted average spot exchange rate of USD to LKR interbank transactions with a variation margin. This denotes movements of the LKR against major foreign currencies. Accordingly, we can see that during first 6 months, LKR has been deteriorated or depreciated against USD, Euro, Sterling, Yen, Aussie dollar, and Indian rupee more than 35%. Monetary policy tightening is expected to ensure that inflation expectations remain anchored around the targeted level of headline inflation over the medium term. Monetary Board, however, wishes to reiterate that the remedial policy measures adopted by CBSL need to be complemented by timely and appropriate policy adjustments by the government, including the need for the expeditious implementation of fiscal consolidation measures alongside efficient and effective social welfare programs to support the vulnerable groups of the society. Central bank would continue to closely monitor domestic and global macroeconomic and financial market developments and be prepared to take further policy measures as appropriate to help reinforce greater stability in the economy in the period ahead while ensuring a faster return of inflation to the targeted 4 to 6% range over the medium term under the flexible inflation targeting framework. References for today's presentation is from Central Bank's Economic Research Department's press releases. Thanks for watching.